Stephanie, as we go into earnings season, what do we have to see? Obviously beats, but forward guidance as well. Is that what's going to sort of provide the next leg if interest rate cuts are uncertain now?
Yeah, I mean, I think that the market is digesting the cuts, right? Is it 0? Is it 1, 2, or 3? Personally, I do not think it's going to have a material impact, even if they did 3, on the economy. When we just raised interest rates over the last 18 months by 550 basis points. So 75 basis points of cuts isn't going to do anything, but psychologically, certainly that would be positive. But again, the reason that they're actually being a little more hesitant on cutting rates is really because of the growth that you mentioned. We're going to grow 2.5% in GDP, or something close to that in the first quarter. We just grew 3.4% all of last year. And at the same time, I know inflation is stubborn at 3.5%, but we're down from 9.1% from the peak. So we've absolutely made progress. So we have to all wait and see. We're all data dependent, but the economy is growing for the right reasons. The consumer is doing well. The job market over the last 12 months, we've seen 250,000 on average jobs produced. That's very healthy. Wages are up 4%. If you want to switch to another job, you're getting 10%. Manufacturing, you guys just did a great segment on all the onshoring and supply chains and manufacturing initiatives on the fiscal side that's leading to better ISMs. We're just starting to see better ISMs, and new orders are going up as well. And then lastly, housing is bottoming. I mean, we were all watching housing last year, which saw a recession last year, but yet the stocks did quite well. But we're now starting to see the results in permits and starts doing better. So you add it all up, yeah, earnings I think are going to be just fine, 8-9%. Are expectations high? Yeah, they're high. But I do think you're going to see not only top line better, but margin expansion. And you're seeing a broadening out into other sectors doing just as well in terms of earnings delivering. So I think you continue to have this broader market. Lots to be excited about.
Well, Stephanie, what about some of the other stuff kind of just under the surface that Mike and some of our other guests have been pointing to? Higher oil prices, gold at record highs, some of the geopolitical tensions. And Jamie Dimon's shareholder letter this morning, he was a lot more cautious.
Yeah, well, so there's plenty to worry about. Absolutely. I definitely give you that, Deirdre. But what happens is, like, I worry when I don't worry, because that means I'm being complacent. I always want to know what's out there that could actually surprise us. We kind of know all of this stuff as of now. And yeah, sure, certainly energy bothers me a bit. And I actually do think maybe the headline on energy for CPI on Wednesday could come in a little hotter because of that. So, but the core number, I think, is going to show some progress, and I think that'll be encouraging. Geopolitics, I don't have an edge on that at all, but that's been with us for a couple years now. And we're able to see last year 26% growth in the market, and year to date 9 to 10% this year. So, yeah, a lot to worry about, but a lot that's going well. And if we do see a pullback, I want to be a buyer.